Had received many requests, guys, so we're going to glance at a lot of charts in this video. I'm going to answer the simple question. People simply are asking, how are some of your traders able to make million plus without buying a single call option when the market continues to go up every single day? So I'm going to show you just that. Now, to make sure you not only see it in this video, but also to make sure you utilize and take some of these skills I'm about to show you, okay, and so you can memorize. It's better if you do it with me. I'm going to throw a bunch of tickers at you guys, but first go to stock charts, okay? On the time frame where it says period, select daily. On the range, 6 months. Okay, that's not the only time frame. Clearly, we'll look at like 20, 25 different time frames, but that's the one I want you to focus on right now to get an overall picture and idea of what patterns we're looking at. So to make sure that your picture looks identical to mine, I've got IBM here to get us started, but you can see that under chart type, instead of any other option, I want you to select candle volume. Candle volume gives you such an insane insight on what's actually happening on days where the market is shifting, on days where a particular stock is going through a trend reversal, because that's exactly what you need to capture in order to capitalize on a 5 to 20x trade. And here we got basic RSI and MACD, so nothing crazy, because really I want you to focus on the pattern, on the black candle phenomena. Guys, if you just look, if you don't want to be friends with charts but you want to make a ton of money, this is the only thing that you really need to focus if you're just trying to keep things super extra simple, okay? If you just follow me with this one thing, you're going to see how crazy consistent this is and how you can easily, with just glancing at the chart, at times you're going to be able to nail some trades like you've never seen in your life ever before. So without any further ado, I'm about to give you like 20 different tickers. There's a lot more, guys. We don't have time to cover all of it, but like stay tuned right now. Go to stock charts so you can walk through these patterns and black candles with me. Okay, so all of these trades I'm about to show you guys, get ready. You could have gotten them by trading directly with a 13 Market Moves coach, or you would have gotten them in the alert group. So all of these trades, these wild, crazy stuff that I'm about to show you, you could have been a part of in the last 20 days. So that's basically like, I mean, that's recent. That's recent stuff when the market keeps going higher and higher every day. So let's get going with the IBM. Okay, the two differentiations I'm going to show you here is a move 2 formation and a move 3 formation. So if you were trading with me, the day before IBM went into the earnings report was right here. You see this black candle with a reversal week right here. And guys, when you see this ahead of the earnings report, it's like, it's an insane probability the shit is going to collapse, okay? So, which is exactly what it does. So if you were trading with me, you know, we were buying 275, 265 strike puts on IBM ahead of the earnings report. So this is exactly how move 3 works out. Basically, you get a major gap down. But notice, most of the traders, okay, they will literally abandon the trade after this. Sure, it was a huge payout, despite of the fact that, sure, going into earnings, you know, a lot of stocks, they will carry a huge premium. Even with the premium, this was an easy, you know, 10x. This was an easy 9 to 11x trade, depending on the exact strikes. If you had the lowest strike, clearly you made a lot more that day, because it basically goes from, we shorted it at about 286 that day, and it opened up at 257 and briefly dropped to like close to 250. So in this area we were closing, but like if you are a real student of the market, if you want to, you know, build a huge account, guys, you don't just stop there. This is the issue. Most of the trades, they'll just stop there. Okay, this stuff does not happen for no reason, okay? So look at the massive sell volume, right? That's why I want you to look at the charts when you're looking at them through the lens of this candle volume, because it matches the size of the move with the size of the volume, and it tells you that a major shift has happened in the stock. What I mean by a major shift, not only does it mean that, you know, you don't go buy this dip, right? That's what they tell you in the news. Buy the fucking dip, right? How would you do if you bought this dip? Anybody? I mean, you would have gotten smoked, killed, okay? Apocalypse, because, okay, sure enough, you want to enter a short position on a bounce. So if you would have just understood how massive and critical this was for IBM, you would have reshorted it again. And look, count the red candles. Anybody? 1, 2, 3, 4. Okay, 4 red candles back to back. That's what you need. Okay, so if you miss the stock on the earnings report, what you really need, you need to wait for a little bounce and you need to come back heavy, because by the time this bounces, everybody thinks, okay, everybody's buying a dip, everything is cool. But no, the move just begun. Okay, so when you see a black candle like this, move 3 formation, massive gap down with an attempt to bounce, failure to bounce, okay? I mean, be ready that this stock is going to continue lower. But where do you start tracking this? Guys, you start tracking this with the black candle. Okay, find some other black candles for me and see what happens next. So some of you are so hesitant to hold the position overnight, right? Well, find black candles for me on this chart. So here's the black candle right here. What happens next? So which means if you would have gotten into a short position here, well, next day you would have collected what? Massive gains. Because here, options were dirt cheap, okay? Nobody expected a bounce, because look how many days this shit goes high, high, high. Black candle, boom, you short, okay? Collect it. I mean, certainly, nice, easy trade. Black candle right here, anybody, what happens the next day? Whoa, well, this is a resemblance, right? I mean, this is a beautiful resemblance of exactly what happened here. So you look back what happens to some of the black candles that the stock has in the past. And if you're looking at 1 minute chart, 2 minute, 3 minute, 5 minute, 15 minute, 30 minute chart, you're not going to see this. You're also not going to see this unless you're using stock charts. There's no other software that actually displays the black candles, okay? So this black candle, what happens next? Whoa, huge fucking gains. This black candle, 2 days lower. This black candle, another day lower. So basically, like, there is 90% statistical evidence just on this chart alone for this particular stock that once you have a black candle, and the most meaningful one is the one that's got the tail sticking out like this. This tells you the next day it's got a high probability of a drop. So that makes for your best entry, okay? Now, when this black candle happened, what was happening with the market? So let's go to S&P, type in $SPX. Like, what's going on? Nothing, right? But you can even go right here and spot some black candles and see what happens the next day, right? Some instruments are going to be a lot more consistent, giving you a much higher probability. But look, the market basically, okay, if you trade, that's why I say in some podcasts, if you trade SPY puts, you're not making shit. I mean, as far as options concerned, right? I'm not talking about a long-term trade where, oh, by a miracle of God, and please don't tell me you fucking entered here, okay? And then you waited all the way to here to exit. I mean, most of the traders, they're not going to stick with the trade for this long. So let's just be honest with yourself, okay? The point is this, okay, is on these tiny ass little candles, you're not making any money. You're not making anything because the move is contained to like plus minus 20, 30 points in either direction for the day. And most of them end up in a positive zone. So which means if you're highly bullish, okay, you're going to go buy calls. The moment the market pulls back, options are going to lose value. You're not going to make shit. So that's my point about trading S&P. There are times to trade it. Like, you know, we were trading heavy S&P 500 futures, NASDAQ futures, RTY. And the whole illustration I'm about to give you is to show you that right now it's probably about time, because today we had the first resemblance of a black candle. It didn't end up being a bear black reversal candle, but like we're super close, guys, because you got, when you look at this chart in the RSI, for example, you got major bear divergence. So last time the price action got to around here, the RSI was way above the level where it's at now. But the price action wise, we are above the prior level where RSI set the high. That's a major bear divergence on RSI versus price action. Okay. Now, it doesn't mean that we're going to collapse tomorrow. That tells you we're pretty fucking close to a major move. And I'm not talking about a move like this. We're pretty fucking close to probably blow off top. but so you understand that sometimes if you just look at what the indexes are doing for the day, you're not really reading the market. You don't, unless you're looking at various sectors and what the price action, what the behavioral patterns are telling you. Okay, you could be looking at this and say, well, how the hell somebody's making money on puts? Okay, but you're missing the point. And the point I'm going to make by showing you some other ticker symbols here. So far we looked at the IBM earnings report. Okay, let's move on. Let's take a look at ticker NOW. Okay, now do you see that this is a move 2 formation? The difference between a move 2 and a move 3 formation, move 2 pays you a ton more because move 2 normally would happen after the stock reports earnings. And you can clearly see when the stocks report earnings, right? Because when you look at the candle volume on the chart, these big candles are going to be coinciding with the largest volume on the chart. That means what? That means that these are key pivotal quarter earnings announcements where a stock it has a prevailing view by the investors where they should be moving higher or lower, or whether investors should be taking profits. If you were to describe specifically, which we go into detail, guys, in a much bigger detail than what I'm going through here as far as the black candles. Black candles really means that the trend is shifting. It could be shifting for a couple of days. It could be shifting for a number of weeks or even years. So ticker NOW, which is a company ServiceNow, highly favored by a lot of institutional investors. You can see last quarter, it gaps up, okay? And it gaps up in really strong volume, and since then, right, it creates top 1, top 2, top 3, top 4. In this particular case, after the earnings report was actually quite good. It bounces and it sets a top at about the same level as it did set the top the prior 3 times. Top 1, top 2, top 3. So this is top 4. Normally it's 3 strikes, but it also could be 4 strikes and you're out. So in this particular case, they begin dumping NOW on a great report. Basically, they're saying, look, hey, I'm not waiting until this thing goes and breaks out higher. Okay, and that's what a lot of people will do. So a lot of people that buy calls are like, oh my God, well, this is a great earnings report. I'm buying fucking calls. You buy calls right here the day of the earnings report, the day after, like let's say this thing reported earnings like early in the morning before the market opens, or the night before market opens, and that's, you can see just green candles, nothing but fucking green candles, right? So when you're looking at your 1 minute view on whatever trading platform you're using, you're seeing green candles, nothing but the green candles, right? And what you don't see is this, because you're not going and looking at a 6-month chart, 3-month chart, 2-week chart, 12-month chart, 2-year chart. You're only just, when you zoom in, it's just such a small trading time frame. And the reason most of the traders do it is because they're like, well, I want to get in and trade. I want to get out in the next 15 minutes. Yeah, trust me, that shit ain't going to make you any fucking real money in trading. So the point is this, okay? When you see a bounce after the earnings report hitting a certain level, where the stock has stalled out and was rejected multiple times before, in this case 3 times prior to this. Okay, this is an awesome fucking entry on the short side. And the black candle, you're not, like, the day the market opens, you're not going to see the black candle. You're going to see the black candle maybe within an hour or 2 hours or 3 hours sometimes after the market opens. But it gives you the major sign that, hold on, this is a major trend reversal. Yeah, I know the earnings report is bullish as fuck. I know things are bullish as fuck for this company. I know Kramer is screaming his lungs out how we should buy this shit. Okay, but you do exactly the opposite. Okay, because you've done your chart study and you come to here and you're like, okay, boom, this is it. This is my sign. And let's say you're late on the trade by that day. Okay, but now you got perfect setup. And look, this RSI bear divergence, guys, it don't lie. Okay, the first time we get into this price level, which is consistent with the level from which the stock sold off after it initially bounced on the earnings report, right? From this level, you see that the RSI initially was all the way up above 70 right here. The second time it got to this level, RSI was lower. The third time it got to this level, the RSI was lower than the second and the first time. And the day of the big daddy bounce after the earnings report, it was even lower than the prior 3 times. That's your bear RSI divergence. You know you need to be shorting the hell out of this thing. And then if you did that, okay, and you actually stayed with the trade, you would have gotten consecutive we're talking about 20% drop. 20% drop, consistent drop, gets you paid with options, guys. I mean, don't be going out now buying like 1 month, 3 month expiration crap, because by the time you pay for the premium, you're not going to make shit. That's why you come to trade with 13 market moves, because we told that day, I was telling the guys I'm personally trading with to short the fuck out of NOW. Okay? And you're going to see how consistent. I mean, you're sitting there looking at this. I mean, whoa, but what was the market doing in this fucking day when we were shorting NOW? Well, I can guarantee you 100% S&P was going up and NASDAQ was going up and so was RTY was going up. All 3 indexes were going up and we were making money on puts because we're paying attention to the shit that matters on the charts, y'all. So let's go for the next example, TXN. Now, anybody tell me on this one, okay, which move did we nail here? TXN was a big payer because options were stupidly underpriced ahead of the earnings report. So clearly here you see an eloquent example of a move 3 formation. We shorted it here at 215. We collected profits the next morning when it was trading in the 180s, guys. That's a huge move. I'm telling you why it's a huge move, because we were holding 200 strike puts on this thing. We had depending on the size of your account. I mean, the bigger your account, you can go much safer on some of these strikes. So I had some guys who were holding 210s, 205s, some guys were holding 200s, but the 200 strike, I mean, you can go and check this out, guys. Before the earnings report, the 200 strike were sold for $1. And the next day, we were selling them for 14, 15 bucks. That's a 14, 15x trade. And what could have been your clue right there? Well, your clue is right here. Okay, you see that tiny-ass little candle? Okay? And, I mean, there were plenty of other things that I have mentioned to some of the guys I was trading with, but, like, you know, you got to sometimes go look at the option chain. The call-to-put ratio was like as if somebody knew something was going on, because somebody was buying a shitload of puts in a 200 strike. And that's why we even got in this kind of far out of the money in relation to the potential size of the move, right? You could have expected, okay, this thing could drop 17 bucks. But in order for you to make money in a 200 strike, when you're entering a 215, you need that shit the next day to be way below, because keep in mind, you also got your option premiums you're paying for these options the day before. So, but this is the oversized move that we read based off the option chain calculus, combining with the charts and combining, like, I mean, guys, I can't be giving out all the secrets. That's why you should come and trade with a fucking coach. But anyway, focus on this. This was an easy trade. This is a move 3 trade, okay? And if you're part of the alert group, guess what? You would have, when do you think you would have gotten the alert? I sent you the alert the day before and the day of the earnings report before 4 p.m. I sent this alert 3 fucking times. So if you didn't take the trade, whose fucking fault is it? All right, next example, guys. Now this one, guys, you know, I mean, if you've been around the block, you know, man, this stock, damn, this thing never drops after earnings. ISRG, that's just like, it's like clockwork, right? It's just every earnings report, it's up, it's up, it's up. But not this time around, and we nailed it. So after the earnings report, what does ISRG do? It freaking shoots up. We nailed it right here. We shorted at 520, okay? Not as huge of a trade as some of the others, but for whatever reason, this time around, I'm telling you, it's not about sometimes how huge the size of the move is, but you got to keep things in perspective, okay? The size of the move in relation to how much you're paying for the options. So the options were actually not that high to what they are historically, because I guess everybody figured, well, man, this thing is about to break out high and go high. Well, we caught that move. We nailed it. you know, based off the move sequence, based off the RSI divergence, the little indication right here, little black candle. Guys, I'm telling you, if you focus on the right stuff, and guess what the market was doing that day? Oh, surprise, surprise, the fucking S&P was going high, and we were nailing this trade right here. Now, let's take a look at the next one. Maybe give you some more fun right here. COF, Capital One Financial. Actually, one of the wildest trades, guys. So, you know, Kramer, so bullish on the shit. Man, dude, COF, we're on an acquisition of DFS, and they bought Discover, buy this thing, it's going to the moon. So it looks for a moment like the entire world is buying it. And guys, if you listen to the podcast, you know, full disclosure, we bought some puts ahead of the earnings report, and I specifically sent out the message in the alert group. I said, you buy some puts now, but be ready to add a shitload of puts if this thing bounces the next morning. Okay, and it did, and the bounce was wild and crazy, and we nailed, like in the alert group, I send the message the next morning. I'm like, make sure whatever you do, you fucking buy COF puts, and you can go. And at the moment I was sending messages to buy COF puts in the group, guess what was happening? You can literally time it. Kramer was recording a video on CNBC bragging how COF was such a great holding for him and how it can only fucking go higher. And guess what? I mean, we're talking about a financial stock. Financial stocks, normally they don't move, but maybe 1% a day. This thing dropped from 230 all the way down to 205. That's a 25-point move in a financial company. That we're talking about a 10% move within a 24-hour time frame. Guys, you get paid fucking big on this, because when it was shooting to 230 and above, options in like 225, 220, 217, 215, they were like pennies. They were pennies on the dollar, and later, within 24 hours, fast forward, they were selling for $5, $7, $8, depending on the strike, $10, $13. So, I mean, it don't look to you like, if you're new, you're looking at this, you're like, man, what's the big deal? Well, the big deal is you nailed the fucking top. And if you're ready, like what most of the people do, they're going to buy an option ahead of earnings report, and then it goes against them the next day, and they're like, oh my God, what a bad trade. I don't know why the fuck did I get into this one. No. You go after it. If you believe in a fucking trade, remember, every podcast I record, what do I say? Believe in your ability to beat the market. So I don't give a shit what Kramer is saying. I don't give a shit what anybody else is saying. Guess what? I keep my eyes on the price, and I see that this thing begins slightly to reverse off this high. And yeah, the volume is crazy, but I'm like, goddamn, look at this. We were just at 140 on this financial. Now we're pushing closer to 240. I'm like, man, I got to take a shot at this. We're going big on this, because the probability that people are going to take profits here is just too fucking huge to ignore, and we fucking go for it. So, and this is probably one of the most difficult entries, right? Because, I mean, you look at the news, everybody's buying it, and you're like, what? Like a dumbass sitting shorting it there? And guess what the market was doing that day? Oh, damn you right, the market was going higher as well. All right, guys, next piece of evidence is CMG, okay? Chipotle Mexican. Used to be like this stock, same as some of the other, like ISRG. Could never go down during the earnings report, right? Well, no, we shorted it right here, guys. Okay, if you're part of the alert group, you would have gotten the message. If you're trading with me, you would have shorted it right here. Nice and simple, easy trade, okay? And guess what? If you try, like let's say, okay, you're trading on your own. You're not trading with anybody. You're really trying to learn something from this video, okay? Pay attention, like the size of the volume at these earnings report, right? While the entire time for like last 2 years, I'm recording videos about stagflation, which basically means a company's sales are slowing down and their costs are going up, and that's exactly what happens to CMG. So the input costs of running the business are rising while their sales are slowing, and that's how it looks on a fucking chart right there. Okay, print this out. This is called stagflation. Okay, move 3 stagflation trade. Basically, you know, this one, guys, this wasn't a huge trade, because we weren't buying these way out of the money. We were buying like 50 strike, 49 strike. And so by the time it gets down to like, we're probably closing around here, 45, 44. No, we were closing at 44 and some change that day. So it wasn't huge. But if you're really trying to learn, like, look, after such a huge sell volume, wait for a bounce. And remember, all the videos I've been recording, all of it was, what did I tell you? Short the fucking bounce, short the bounce, short the bounce. So you wait for a major gap like that. Okay, most of the people tell you to buy the dip. Okay, they may be right for a fucking day. Who gives a fuck? Okay, but then what happens? This is pure gravy. 1, 2, 3, 4, 5. 5 days lower in a row. But guess what? By the time, this move is done and the bounce happens, options are cheap. That's your entry. Okay, that's your entry. You catch 5 days lower in a row. I mean, that's like, do you understand, when a move happens like that 5 days in a row, all you got to do is just hold the position. Hold the position. You're done. You just, but most of the people, what are they going to do? They're going to jump out. They're going to completely forget about this trade. They're never going to come back to it. They're never going to short it right here. On the bounce, guess what? They're going to be buying calls. People will be buying fucking calls right here where they should be buying puts, damn it. That's why you sign up to trade with the 13 Market Moves coach, y'all. Anyway, next, so this is it. What you guys should know the moves by now. Like, as far as I'm showing you on the charts, like, this is a 6-month daily time frame, but they look like, ideally what you want to do is you want to get really good with understanding the way the move progresses on daily basis, because when we take the trades on our screen, we have the 1 minute chart. But guess what? Before we even go and pull up the 1 minute chart, we're going to do all this homework on much bigger time frame charts, and then we're going to zoom in finally, to see exactly what's happening in that particular day. But you got to be looking at many time frames, guys, in order to nail some of these big ideas. So CMG, easy trade, move 3. TDG, it's been a long time favorite of mine. Trade super low volume. If people tell you, man, don't buy options and stocks that are low volume, what kind of garbage is that? Who's teaching all this crap? Okay, so you don't want to trade this? Well, guess what you missed? A drop from $1,625, and the next day, this shit is at $1,370. Yeah. Guess how much these puts would have fucking paid you? I mean, do you get the point? Stop listening to all the garbage. Actually, like, fucking trade with somebody who does this shit for many years, okay, and have a certain strategy that they follow and they stick with. Guess what the market was doing on this day? Shit right, it was going higher. That didn't stop us from locking in the gains on this beast right here. Move 3, okay. ALGN. The trader recorded the video where he went 10K, to like $1 million plus. That was one of the trades. I mean, it didn't have a huge position. He made like, I don't know, 40K, 50, 60K on this trade. But it was a decent trade. I mean, to make 60K on a trade with, 4K, put in 4K in a trade, that's not a bad payout. Most of you fucking go to sleep dreaming of a payout like this. We make this shit actually happen here at 13 Market Moves. So the entry was here. If you were in the alert group, you would have gotten this fucking alert 3 times that day. We got in 206, 207, okay? The day of the earnings, we collected profits the next day between 130 and 140. Okay, done. Move 3. Guys, learn the moves, learn the setups. There were plenty of warning signs on this. I actually talked to Lon Tom about this particular trade, describing the context of, what was preceding. In particular, I mentioned that, sometimes Wall Street will give you a benefit of the doubt. You have one bad quarter, and it'll give you a benefit of the doubt. You got a second bad quarter, but guess what? By the time you get to the third bad quarter, I mean, it's done. And this is what happens here. It's the third bad quarter. Basically, you would have known the company had a history. Again, how would you know that? Well, because you go back and you look at some other time frames, right? So let's go and take a look at a 1.5 year time frame. And this thing's been in a major downtrend for like a long time, and it has a history of deteriorating earnings and metrics. And when this thing, I mean, look, the blue line crossed here and it never crossed back, but the price action did, and we went for it, guys. We just fucking went for it, and we collected at 12 to 50 next trade. And I'm talking like quality strikes like 190, you know. I mean, but if you had 170, I had some guys had 170, 165s in this thing. I mean, you were like 20, 30x trade on this. I mean, ALGN, you know. So next one. I mean, all of these trades, guys, they happen in day. All of these trades that I'm showing you, I mean, all of these trades are like in the last 20 days, damn it. Okay, VRTX. I'm not showing them in order because, man, I'm trying to remember them here as we go. I mean, let's go back to our 6 months. There it is. Boom, shorted this thing at 470, collected the profits. Unfortunately, this one, I mean, we took some initial profits at 400. It did drop much lower, but we only took this because I had like a variety of other trades. We sold half of the profits here, and then we sold some later, but we sold some only because I was eyeballing like some wild fucking trades. And so on this one, we had 460 strike, 440s. I mean, if you're wondering how do they make money on buying puts, that's how we fucking do it. Look, it's a stock after stock after stock. And like, what's crazy, like all these stickers I'm naming, right? We had some restaurant stocks. We had IBM. We had NOW, which is software. We had ISRG, which is healthcare. We have TXN, which is Texas Instruments. It's a tech company. I have ALGN, which is like an orthodontics company. We got TDG, which is like freaking airplane parts and shit. We got VRTX here, which is a pharmaceutical company. I'm telling you, these stocks are dropping like flies while the market is doing what? The market's got you mesmerized. Oh my God, it's hitting all-time highs every day. Yeah, and it's moving by 20 fucking points and you ain't making any fucking money on calls. That's why you come to 30 market moves, so you can catch some real fucking trades like this one, damn it. All right, guys. I mean, I've been saying, like, look, the economy's slowing. You got to short. Some of these travel stocks. I mean, boom. This one. I mean, how do you? This is a Royal Caribbean Cruises. We shorted ahead of earnings. It's a move 3. I mean, clearly, not as crazy trade as a couple of others I just showed you. But like still, where the options were it still is a highly profitable trade. And guess what? After the gap down, for those of you that are trying to really study this material, what happens? You get a huge drop like this on volume. It bounces the next day. What do? You short it again, and boom, voila. Okay? I mean, it's not. This is not a rocket science, damn it. Just follow these charts. They're telling you exactly what's about to happen next after this type of setup happens. You know? I mean, who wouldn't want to short a freaking cruise line? People can't pay their fucking mortgage payment. Who's going to go on a fucking cruise next quarter, I wonder? I mean, this is one of these stocks, guys, in the next 12 months, this shit is going to be trading at $50, and right now it's still at $313. Yeah, so for those of you that are buying like annual calls, just to be safe, I'll go buy a put option on RCL that expires in a year. Yeah, go buy a fucking, 150 strike, because in a year this shit is going to be at 50 and you're going to be $100 in the money. Damn it. All right, what about, okay, we talked about CMG, but look, something recent, like yesterday. This was the alert from yesterday, guys. CAVA, okay, boom. Goes into earnings at 85. I mean, collecting gains in the 60s handle today. This was a beautiful trade. This was simple. And what was the market doing yesterday when we alerted you of this trade? You guessed it right. The market was going high, and if you were just looking at the indexes, you missed another stock dropping, damn, 20%. I'm sorry, this one dropped more than 20%. Fuck, this one really fucking did it. And 25%. I mean, it was huge. Anyway, let's these are though not going to be some of your greatest trades. Okay, stock drops 25%. You collect 10x, maybe 12x, but like some of your biggest ones are going to be shit like CRCL. You know what I'm saying? People are just like, oh, well, like we shorted it here, right? You've heard me on the podcast. I said, man, when the shit hits 295, 300, we're shorting it. Yeah, within like 1, 2, 3, 4 days. I mean, it's down to 180. I mean, look at it. Short in the air, collecting project. Same thing repeats itself. Guys, study the levels, right? And it just like yesterday, man, the thing reports earnings. It goes to 187. Black candle. Hello, what do you do with it? But some crazy stuff was happening today because crypto keeps advancing, right? And so, okay, this thing was yesterday at 187, 188 at the highs, you know, and they're selling more shares. So normally in that, the stock would drop. But the first thing I noticed in the morning, it was pumping. So sometimes, you know, Tesla back in the days was able to get away with it, issue more shares and still go higher. So, I mean, you got to, I'd say, stay probably away from this one for a little bit. I mean, I'm not discounting, can go to 130 or something like that, but like a big move is done in this. I mean, we caught this thing literally 240, 238. I mean, all the way down now, almost 100 points lower. I mean, it still could be a good trade if you short it on like maybe a Friday. You know what I'm saying? But be careful because the market as far as crypto's got so many positivity right now. It could end on a dime, okay? But if this positivity in crypto lasts for just another couple of days, I mean, let's say ETH hits 5,000 tomorrow or something like that. I mean, sure, it's reasonable to expect this thing is not going to drop when the ETH is going to hit 5,000. Everybody's going to be celebrating that. But which by the way, I've got a killer trade associated with it. I'm not going to give it away here though. I mean, and as much as I talk about puts, we haven't bought calls in a while. This one I'm actually eyeballing calls on one particular stock in the market right now. I think can go 20, 30x. But guess what? For overall, what you want to do right now is you want to identify those moments because there's so many. You want to identify these stocks that keep putting money in your pocket when everybody's focusing on the index and pushing barely 10, 20, 30 points higher on day, giving it back a little bit on a day. Giving like this to make money with directional options. You guys need stocks that move. So this would be a good one to watch. A lot of the move has transpired. Doesn't mean it can't give us another 10, 20 points, but you're not going to make put together a 30x trade on this move unless you really. I mean, there's a lot of shit that can happen in the next 48 hours. So I'm certainly keeping some of these stocks for some wild moves, guys. I mean, the entry and exit is everything. And like if you're running the business or if you're at work or whatever you're doing, like anybody can place a trade within 10 seconds, but you may not have the time or the patience throughout the day for a variety of reasons to, come in and nail some of these entries and exits because that's what it really takes. Like if you're shooting for some high payouts, 10, 20x on a trade, that's what you need. You need to understand the beginning of the move, the end of the move, the early signs or the innings of the move. And you need to understand the levels where potentially the move could slow down, could signify a decent exit point for you. But same thing. Hey, black candle was just formed, 1 day down. The only thing I don't like is, the volume's been kind of subsiding here. I want to see an increase in volume, right? So we've had top 1, top 2, top 3 on the black. If it shoots back up a little bit, this could be a decent entry on a bounce. Anyways, some tickers like CAR, right? Gap down. You heard about this trade. This was a really nice trade for us guys. We entered above 209, cashed out 160s, easy trade. Move 3. Right? So when he gaps down, most of the people are so quick to just collect the fucking profits. No, just give it a chance. Look at the vol. Look at the volume here. This is a rental car company that's from the lows of April is up from $60 to $210. That's what I said in the pocket. You can't stop me from shorting this thing. And guess what the market was doing that day? Yeah, sure, S&P was going high, but we were busy buying puts on Evi's budget rental. Next one. Hey guys, this one, I'm going to show you some really, really not, nailing some move 3s ahead of earnings, that's great. But really, really evolving to a high profit trader when you start nailing some of these. Okay, so this is a transport company. Guess what? It's not its first rodeo. Last quarter was bad. Remember what I said. Wall Street give you the benefit doubt on one bad quarter, two bad, but once you have the third one, I mean, you're done. So, however, you're going to be careful because sometimes Wall Street will be like, well, maybe, a couple of, a series of bad quarters is about to end, and maybe that could signify the bottom, and they could start buying up stuff on news that are actually not so good. And then they'll be like, oh shit, what did we just do? Man, nobody else is buying but us. Let's unload this shit. And that's like, look, another black candle. How many days lower? 1, 2, 3, 4, 5 days lower consecutively. That's what you need. I mean, a lot of times people cannot hold on to a trade because the trade is bouncing. You get into it, it bounces, it drops, it bounces again. But like, that's the kind of trade you need. Enter on a black candle, y'all, and then just hold it, okay? So sometimes this volume could be deceiving. This is why you should take the charts, divergences, and pattern recognition course, because in that course I explain that even though this volume is portrayed on the chart as green, what you really have is you have institutional investors are actually utilizing high volume day, like the day of the earnings report, to unload their position. So somebody is thinking, hey, this is a good entry, and they're buying, while an overwhelming amount of sellers is coming. And guess when are they coming? At the same level where the shit sold off and gapped down before. So how do you nail this? Look at the levels, which you would never be able to see this level, right? Unless you're looking at multiple time frame charts. So black candle at a prior level from where there was a lot of selling began. I mean, you know, you're going to come back to that level, and people that lost their ass here, that were waiting for a moment to get out, they sure are going to sell, and this creates 5 days lower. Congratulations. Wow. What you got to do is come to 13 market moves and learn the hell out of it. That's called the move 2 formation right here, guys. Okay, CHTR. And I'm bringing this one up. I mean, this was a fucking wow. I mean, imagine we were entering this shit right here. Okay, 390, 385, 383. I mean, I don't know. I sent it alert like 5 times that day. Okay, and if you were trading with me, for sure you were in this trade. All right, and so how many gap down? What is it? It's a move 3, damn it. Yes, and then you get 1, 2, 3, 4, 5, 6, 7, 8 days lower. 1 day of indifference. People think, oh, we should buy the dip. 1, 2, 3 more days lower after. Guys, I mean, guess what was happening to the market this entire time? S&P was doing what? Going fucking higher. But you were absolutely making no fucking money. Okay? Because you were missing trades like this one. Okay. LLY. You heard the guy that recorded the video recently of taking 10K to $1 million plus. Okay? You saw it. Like, guys, the definition of believing in your ability to beat the market is, okay, he lost over $200,000. You can go and watch the video. He still made over $1 million that week, but he lost on this LOY trade the week before like 200K. Well, it didn't stop us from making a killing on it the next week, because guess what? We still shorted it next week. Yeah, we shorted it here because I'm like, man, it's a miracle. This shit still has not folded. Like, every sign is here. It's gonna fucking make a big move. It's gonna make a big move. So for the entire week here, like, it don't want to make a move. It makes the move the next week, which takes me to the same point I was describing in yesterday's podcast. I was saying you cannot make money by being late. Okay, but you can make a ton of money by being early, but in the midst of trying to be early before a move like that happens. I mean, there were like 100 signs that I was looking at saying, look, this thing is about to make a wild move to the downside, wild move to the downside. I've texted the trade 100 fucking times to everybody. Well, I mean, there were people that were pissed at me that week because, oh, god damn, man, these fucking LLY, there were so many other trades. Why did you give me this one? Because of this, damn it. I was just a few days early, damn it. And so that week, I mean, it finally drops big. Like, yeah, we were buying it here, 760, 770. I mean, gaps down, opens up. But something really weird happens in this one. So it gets down to 637. Then pre-market, it pumps almost to like 700. You don't see it on this chart. You would have to be at like a pre-market chart, pre-hours. And so I got some people that, a shitload of guys are holding this trade. And then, all of a sudden, they see it drop to 637. They're all fucking celebrating, sending me messages. And then guess what? The next moment, like, man, before the market opens, this thing shoots up to 700, right? And then it begins dropping again, but, to like 690, and people are just losing their mind, right? Because we're holding 740 puts, 730. Some people are holding 700, and they get scared as hell because they're like, oh my God, I'm going to lose my... I had one guy literally jump, right at... depending on how many contracts you have, guys, you should never sell your entire position on a nice gap down like this. All right, chances are it's gonna move more. Now, clearly, the case for you is you have small account, you only got one contract. Yeah, you want to sometimes lock in the gains because there were a shitload of other trades that morning that could have gone like gazillion X. Which, by the way, so you understand, this is a solid move 3. This is a beautiful formation. I don't have time to talk about everything we're looking on this chart to determine this drop, but the point is you can do that by acquiring charts, patterns, and divergence recognition course. Okay, the stuff, right, DUOL, guys, this is a good representation of what's happening in the market. So, I don't know, I should probably make this as a thumbnail for this video, but you got a crazy stock that, clearly, look at this. The shit was at 550 not so long ago. And, clearly by this selling for, you see, people are selling, but then the earnings are great. Beat on earnings, beat on revenue, beat on projections, beat on guidance. Like, everything is so perfect. And then this thing pumps from 340 to, not 500, but like close to 480. Right? And I'm like, I know this thing is going to drop. But if you're looking at it like that very moment, like, you don't know for sure if it's going to drop. But like, if you study the history of this thing, it's got high probability of reversal. So, that's stuff you guys don't have time to probably do on your own. But that's why you should, study some of the 30 market stuff. Got like courses that over 40, 50 hours, but like, you can start with something. You can start with like a charts divergence course, learn the black candles, what happens after the big ass black candle, even if you missed the first day, like 1, 2, 3. Imagine catching this. Like, let me ask you straight up, what was the last time you caught a move in a stock on a 5-day option? Okay, a 5-day expiration, where something goes from 480, 470 level to almost 300. That is almost a 200-point move. Do you understand? This is like almost a 50% drop on a stock within, maybe not quite 50, but 40, 45% in 5 days. But guess what people were doing all over the fucking news? They were like, oh my God, the earnings are so good. They're just good. They're so good. It beat on this, it beat on that, and who gives a fuck? Okay, if you bought calls on that day, you got absolutely killed. But if you bought puts on that day, you caught a 45% drop on a stock within 5 trading sessions? Oh, Leo, how do you guys make money on puts when, market is so bullish? Bullish my ass. Oh, you want to hear something funny about bullish? So, this is a, well sought after IPO that got started today. Let me show you exactly what's going to happen to that bitch next, okay? BLSH. They should have called it BTSH. On the first day, right out of the gate, you gotta be kidding me. What is it? It's a fucking black candle, y'all. Does it get more simple than this? Oh, you think they're gonna be selling it? Yeah, it probably is gonna bounce for a day or two, and then they're gonna fucking unload it. It may not even bounce as much, but anyways, too bad they don't have options. This just IPO today. Okay, but guess what IPO'd not so long ago that I've given you like, I don't know, 30 alerts on? Fig. F-I-G. Figma, damn it. What is this? It's a black candle, Leo. I think I'm starting to get the point, Leo. I need to get the freaking course and study the black candles. I need to sign up to trade with a coach because I didn't see this shit coming because I was listening to the news. You're thinking to yourself, you heard Kramer that this IPO, man, that shit was the bomb and it's going to pump and it's going to... Yeah, it did pump the first day. The second day, it created the black reversal candle because people were taking fucking profits on super strong volume. And what happens next? Well, what happens next is it dropped from 140 all the way to 75. And I was getting all my guys in around 115, 110, 105, 100, 95, 90. I mean, this was a given. Now, considering it's a fresh start and it ran up, I mean, it was supposed to start out at 30. I mean, it opened up at 80 plus and it ran up to 145. When you have something like this, sure, options are going to be high. Sometimes they even going to be higher than during an earnings announcement. But the point is, it's a sure fucking thing. Take the free money. This is free money, guys. Don't be buying calls and some crazy shit like that. Anyway, what else? I mean, something recent. What? I don't know. What rings a bell? Coin, right? So people are so bullish in crypto. They're so man. Guess what I was telling traders to do here at 440 on coin? Buy the hell out of puts. And here comes. Oh, do you need a double confirmation on your trade? Because coin sure did give you one. A black candle followed by another black candle followed by a what? By a fucking move 3. I mean, divergence on the RSI. It gets to this level. RSI is way above any point on here. The price action gets higher. RSI is way lower than this point right here. I mean, it's a bear divergence. Double black candle can't stop me from buying puts on this setup. Damn. Anyways, guys, I mean, we can go one after another, but like the point is, okay, I just showed you, I don't know how many tickers I shot. There was a lot more. I can't remember every single one because there are a ton of trades, guys. But the point is, do you really think, oh, fuck, I just remembered one more here. COHR, this was today's alert. I don't know if it's still in it. Okay, so this is not even reflecting. I actually gave this alert yesterday. If you were trading with me, I gave you this trade again today. But the point is simple, okay? This is not a black candle, but it's a red candle with the top information. The stock is up from fucking $45 to $125, okay? Can't stop me from shorting this, okay? And, you know, preceding to this is like a variety of black candle drop, triple black candle. Like the warning was there already here, but sometimes it'll squeeze just a little higher, make a big ass candle like that. I mean, this stock is probably going to hit, I don't know, 80, 90 tomorrow. And, you know, you can come back, refresh the chart tomorrow. I'm recording this on August 13th, by the way, guys. So you can refresh this chart on August 14th. And, I mean, you're going to be able to see, I mean, this is today. This is like, I mean, there were a few of them. CAVA, right? I think that was yesterday. We cashed out of this one today. CAVA. I mean, 20-30% drop. I mean, there's too many great trades. And what I'm saying is, this is another restaurant stock. The United States consumer can't be good if they can't go to a freaking, what is this, Olive Garden? This company, I think, owns a variety of restaurants, but I think one of them is Olive Garden. I mean, people don't spend money at Olive Garden because this company guided lower. So, I mean, you're going to hear in the news how the economy is great, everything's fucking great, but then people can't go eat at Olive Garden? Get the fuck out of here. How great things are, really. I mean, they're not. So, in conclusion, all right, I mean, I haven't recorded a video, like as far as charts concerned, guys, in a while, okay? But the point is very simple. You know, people that don't trade, they'll talk about shit that absolutely does not matter every day. And if you know, I've been recording podcasts because it's much faster, you know, and if I'm traveling, which I travel a lot all the time, like I can just record it and post it. I don't have to sit in front of a computer. You know, if I'm in the mountains somewhere enjoying, you know, nice wild nature, like, you know, I don't have internet, and so I'll record and post it later and stuff. But the point is, you've got to study the curriculum of 13 market moves. If you're not catching these trades or you're missing these kind of trades, and I'm not saying like I've told you, like straight up, we lost a shitload of money on LOY the week before, but we've made a lot more the week after. So, I mean, you got to stay persistent. You got to believe in your ability to beat the market. And just because the price action is going against you, maybe for a week, maybe for a day, maybe for half a day, some of you simply can't handle it, and that's why you're missing the big payouts. You gotta build your patience. You gotta build your belief in yourself to beat the market. So I don't give a shit what they talk about in the news. They can talk about all they want. I mean, you know, they could have gotten a bunch of people brainwashed on a lot of these earnings, but you can't stop me, right? You understand, right? I focus on shit that matters. The fact, like, look, these stocks are moving, I mean, 45% in, and I just probably, I just remembered another one. Guys, there's like hundreds of fucking, I don't know how many trades we've taken the last 20 days. I'm just showing you, you know, the ones that come up to my mind right now, just to illustrate. Like, this is another move too. It's not portrayed by a big black candle, but the idea here is the same. This stock goes into earnings, it bounces, and then it drops, you know, 2 more days in a row. And look at this. I mean, pre-market, this thing was trading at 540. It opened at 520. Within two more trading sessions, I mean, we're cashing out at 420. I mean, do you see the point? That is a 20% move. 20% move. They're not talking about this on CNBC, Bloomberg, or anything. You know, because they focus on shit, absolutely useless shit that traders don't need to focus on. Like, what I'm saying is, if you have a desire, ambition to make it as a trader, you need to work with somebody who is actually trading, not the news, the charts. I'm just giving you trade after trade after trade after trade after fucking trade that's got almost an identical setup while the market is doing what? Here's your fucking market. Oh my God, it is so bullish. Holy oh my God. You know what, yo? I think I'm gonna buy some calls tomorrow and make nothing on them fucking calls. Let me explain why I say this. All right, when the market is like this, like you see these tiny little ass candles, right? It basically, look at these days. What is it doing? Plus minus 10 points. Basically, the entire day, the market is not moving. With directional options, you're not going to make anything. Okay? You ain't going to make shit. And let's say you're bullish on the day that stuff is not going to move. And let's say you're even buying something. Like if you're buying something on call side out of the money, you're done. That's 100% guaranteed loss. But let's say you're a conservative trader and you're buying something close to the money. You're still smoked. Okay, you're not making any fucking money on these calls because, by definition, the expected move need to exceed what the market is expecting for the day in order for you to be making money on directional options. See, the type of trades we're going for, right? Like this. Did anybody expect this thing was up $160 after the great earnings report? Tell me this right here. Who expected that this shit was going to collapse almost $200 within 5 trading sessions? 4 trading sessions after that. Like, that's the trade you need, where the market expectations are baked to the upside and you get exact opposite move. And I mean, look, just in perspective, right? Took 5 trading sessions to accomplish this. It took the stock, what, 2 months to come from here to here, and in a majority of cases, it's even worse than this. I mean, this move, this stock erased in 5 trading sessions, normally would take a stock sometimes 4 months to gain, 5 months, sometimes more. So, and then you got stocks like, you know, they're just like, like, this is a weird ass stock, SAP, right? When this thing is, it's an obnoxious category right now, software. Like AI is taking over software. You gotta short the software stocks. Why do you think, like one of the examples I showed you earlier, like NOW, why do you think this is, I mean, this is a 200-point drop, guys. Look, 1050, 840, right here. It took a few extra days on this one, okay? But the point is, like, they are continuously selling these garbage software shares. And this company used to be like one of the hottest software tech. So the market is changing. You cannot, like, observing these stocks, I've given you like 10 different sectors. They have similar patterns that are dropping like rocks within trading sessions. Some of them are dropping 20 to 30% within one trading session. Okay? You cannot sit here, look at these charts and tell me that everything is fine with the market. That's why you hear do me a podcast saying, man, this is a fucking top. I'm not looking at I'm looking at this kind of stuff. This is what I'm looking at. And this is the top. And sure enough, you get enough stocks, major stocks where, you know, big institutional investors have a bunch of money tied up like this one, NOW, right? And they're getting out at the same time. I'm telling you, the indexes will be impacted in a big way. We're probably days away. So I could be off like on an overall market top by like a couple of days, but I'm telling you, we're set up for like a blow off top, and the indexes are going to look like this. Take a good picture of this. Take a picture of this with your phone, okay? And then go back here and pull up S&P and see how it looks now. What I'm trying to explain you, but giving you all these examples of various sectors that are dumping. Initial bounce, what do you do with it? You short it. All these various sectors, high quality stocks, they're dumping, okay? It's only a matter of time until that's going to catch up with the indexes. So, and what you want to do, like, if you never nailed a 50x or 100x trade, it's not going to be done on shorting stocks ahead of the earnings report. On very, very rare occasion, you can do that. Most of your earnings plays in a move 3 formation where something gaps down the next day, depending on the strike, you're going to make 5 to 25x. That's basically it. But if you want to nail like 100x, it's going to be done on the indexes, trading futures on stuff like S&P futures, unlike SPY, which works great for small accounts because you don't have to worry about how many entries and exits you make when you trade futures. You don't have to worry about PDT if you got a smaller account. And it just doesn't seem to matter how many times I explain this. Like, people still don't go and set up the right account. So if you want to set up the right account, go to Tasty Trade, guys. You can even deposit crypto there for instant deposit. You know how many guys I've had, I'm like, oh my God, Leo, but I couldn't take the LLY trade. I couldn't take the IBM trade because my funds didn't hit the account. I'm like, well, why don't you have an account set up at Tasty Trade? You can like deposit crypto and it's available right away and you can trade. Why aren't you doing that? Why are you waiting for 5 to 7 days on a deposit until the bank clears it, until they, look, man, people doing ACH that takes freaking 6 days to clear. Like, stop the insanity. You can't be doing that when the market is moving. And by looking at this, right, you would think, why the market, I mean, okay, we're up another, what do we do today? Fucking, I mean, 0.3, what is that? 10, 20 points higher today. I don't even fucking matter. I don't even like, I'm not trading this right this second, but I could be trading this tomorrow and the next day because I think this pivotal moment, right? All of these charts that I'm observing, they're telling me that a key, critical, pivotal moment in the market is so near. And if you nail the transition, if you nail the black candle, the granddaddy black candle on like S&P futures, or the Big Daddy Grand Candle on like ComQ, okay, which is NASDAQ, okay, which is like, it's giving you signs, right? There's a black and a black and nothing happened. No, there's another little black. Nothing, right? But look, there are instances, okay, where it does fucking matter. Like, look at this. Boom. 1, 2, 3, 4. 4 days. What is that? It's like a 2,000 point drop right here. So be ready. We're about to get this, is what I'm trying to tell you, man. We're so close for the indexes to break down. And I would even be so freaking happy if they just bust it out for another day or two higher, because that just seals the probability of nailing 100xer. 100x trade, y'all. It's near, is what I'm trying to tell you. So time is critical. I want you guys to be a part of these trades. In final comment, I'll type in WTIC. That's the chart of oil, and oil is in my view, it's an incredibly dangerous setup. Now, if you've been a part of the alerts group, you've traded with me, you know, I've been shorting oil every single fucking day since this day right here, which was July 31st. If you were trading with me, if you're in the alert group with me, you know I'm sending oil puts like every day for the last, well, let's calculate. How many days do we go lower? 1, 2, 3, 4, 5, 6, 7. 7 days lower, a little pause on the 8th day, 9, 10. So out of last 10 days, we went lower on oil in 9 trading sessions. That is not normal, y'all. Do you understand? The last time this happened, was like, I mean, this was April, remember? 1, 2, 3, 4, 5, 6. Of course, the moves were much grander. And, this is why, this trade, it has not been a huge bear. Depending on the strike, you're like, every day you short this, you make money on close to the money strike. But we've also been targeting out of the money strikes, and those been unsuccessful because it just seems like oil is just stalling. It's stalling at some key numbers. Like yesterday, it stalled at 63. Today, it stalled, look, right here at 62. But what I'm saying is we have not had a big move expansion yet. There are times when oil can move 10% in a day, 8% in a day. That's like $6 move from current level of 63. So $6.30 puts us at 56. Well, guess what 56 is? Well, that's the April lows right here and right here, baby. And why would that happen? Well, okay, not so long ago, we got a really fucked up job report. And most of the people just, they sold a little bit of stock that day. And then, by Monday, everything was rebounding. But like in the last couple of days, we've also gotten the oil report where it says that the supply of oil is building up consecutively. We had an oil report yesterday, and we had an oil report today that is like, yesterday's report showed like a 5x build in supply. Today's report showed 2x build in other supplies of oil. And it looks ugly as hell. But with this critical bad data, right? Job report revision should have really gotten the market dropping way more. But as I mentioned at the time I was recording that podcast, that beware of the bounce, because the market could easily bounce because they're going to start calculating the probability of the rate cut, and that's really what the market's been focusing on for since then. So, but the slightly longer term damage of the report revision, I think, is going to be visible, and I'm not sure how much the market's going to be able to focus on these rate cuts. Because I'll give you one date, October 8th, 2008. Guess what happened on that date? Federal Reserve cut rates. What do you think happened to the market? It fucking collapsed. What do you think they did the next month in November? They cut the rates again. It all started with a basically half a point cut. 50 basis points in October 8th, 2008. I mean, it really accelerated the crash, which already begun by that point. I think by the time Federal Reserve is going to cut in September, which I think there's high probability of that, the market could already be way lower than where it's at right now. But the easiest trade, in my view, ahead of the Trump Putin summit this Friday, I mean, what can you do? Just short the fuck out of oil. If it bounces, short it. This chart is highly, highly dangerous. And look, there was a chance that oil was going to bounce if it held this 64.80 level, but it didn't. Like, it stayed 3 days under it, and then it tanked some more last 2 days. But we have not seen a candle that looks like this yet. We've not seen a candle that looks like this or like this. And what I'm saying, this candle can happen in the next 24 to 48 hours. Our target on oil for tomorrow is 59. Could be slightly off on that. But what I'm saying, in the next 2 to 3 trading sessions, I would not be shocked if oil revisited the lows of April. And I think the craziest shit, nobody's talking about oil right now. But oil is, I mean, you gotta watch oil, because the only reason oil's been trading here, I think oil is a much better barometer of the economy than the fake job reports that get revised every damn month. The fake CPI report, which is trying to make every president look better. If you put all this fakeness outside and you just focus on the price action of oil, oil is really telling you what the fuck is happening with the economy. And when oil drops 9 days out of the last 10 trading sessions, it tells you the economy is fucked. But yet, we have clear signs the economy is fucked by watching the oil chart. We've been making money every day shorting oil in close to the money strikes. But yet S&P is at all-time highs. I don't know a better definition of a bear divergence than the one that we have currently between S&P and oil chart. And before you know, S&P will look like the oil chart. Let me show you the oil chart one more time. I mean, this is how S&P chart is going to look. And it's not just, some of those that are new. This is not bullish. Damn it. Not to say that, if we touch these levels, we're not going to get a bounce. But I'm saying any bounce between like the time I'm recording this, which is after market on August 13th, and any bounce on it, you got to go for it. You got to short the fuck out of oil, because the probability that it's going to touch 56, it's fucking insane. You got 2 leaders meeting on Friday. The whole world's going to be watching. The probability that something is going to go wrong while that meeting is happening is very low. I think they already got an agreement in place. It's going to be a show-off. They're going to meet. Something good is actually going to come out of that meeting. And what I mean by something good, any sort of continuation of peace talks is a good thing, because it basically eliminates sanctions. All the market needs to hit 56 here is some kind of positivity this Friday. They don't necessarily have to solve the war entirely, end the war. They don't necessarily have to do anything significant. All they need for the oil to drop, all we need is for this meeting to happen, them having a nice handshake without killing each other at this meeting, and oil fucking drops like a rock. So I can't think of an easy trade. You got job report revision tells you the economy is going to hell, which is bad for oil. You have last 2 data points on oil that are still probably overstated. They're total shit. That tells you that the economy is really slowing down. But if you go watching any video on CNBC, everybody's bullish as fuck. Well, no wonder. Why would they be bullish? All right, let's go back here again. This is why they're bullish. This is why. How can you not be bullish here, right? But yet, oil is telling us it's not bullish. This is the biggest fucking divergence, and you should be short in the market like crazy on any sort of bounce that goes beyond this. I mean, 1-2 day, you know, and clearly you could say, but wouldn't that be very bullish if they made some kind of resolution to the war situation in Russia and Ukraine? I would say yes, and on that you're looking to get what? Anybody, please, that's been paying fucking attention today. Okay, this is what we're gonna get. This is probably the greatest representation of what's gonna happen. Boom. So the day, this is how Friday could look on S&P, NASDAQ, RTY. RTY is just insane short right now. I mean, hopefully it goes higher another day or two. You fucking put a big on short on that. So this is how Friday could look. So basically a big pump, big reversal come Monday, Tuesday, Wednesday, Friday next week. This is what you're looking at. All right, guys, if you have any questions or if you have not landed your first 100x trade. Now, some of you haven't even landed your first 20x. Some of you haven't even landed your first 10x. Some of you haven't even landed your first 5x. What the fuck are you waiting for? Come to 13 Market Moves, guys. By the way, if you're trading with a coach, you're reaching out. A lot of people are reaching out to us right now. Just understand all the traders are on Freema. So if you want to sign up, you're probably going to get a message from Jennifer. She's going to tell you to download Freema. Then she's going to get you in touch with one of the coaches here. Possibly me, possibly not. I mean, I try to take as many traders at times, but it's impossible for me to be trading with everybody. So just reach out to us. We're putting together a new site. We're putting together a bunch of new things. But try to get in touch with someone like tonight, guys. Because I'm telling you, next 8 trading days, I mean, imagine nailing this on indexes. Like, that is, as a trader, that's the kind of stuff you live for. That's the kind of stuff you wake up for. That's the kind of trade. Remember, this is a move 2. It pays you exponentially more than a move 3. But what gets you paid even more than a move 2 or 3 is a sequence of 2, 3. That, like, you nail a 2-3 sequence, that's how you get your first 20x, 30x. At times, depending when the options are priced, could be a 50xer. Anyways, guys, let's roll. Get in touch with us. Sign up to Trade the Coach. Study the charts. Understand the black candles. Keep it fucking simple, but, you know, take advantage of this market timing because it won't be here forever. Let's fucking go. Make it big. 2025. And hey, I did record this on August 13th. For those of you that have been with 13 Market Moves for a while, but haven't made your first million yet, it's time for you to fucking make it happen. Let's roll.